Good morning. Hello, everybody. It is 9:20 a.m., March 24th, 2023. We are 7 days away, 1 week away from getting into April. I don't know what I'm going to do on April 1st. I got to do something, though. I got to pull some type of prank. I don't know what I'm going to do April 1st, but it's gotta surprise you guys. And so what title could I come up with on it? You know, I remember Graham Stephan, he released a video that he was getting sued by Apple like in 2017 or something. And I clicked on it and I was like, man, Apple's suing this guy? That was crazy. And then 9 minutes into the video, I realized it's an April Fool's joke. And I'm just like, I don't like this guy anymore. So that we got to see what we can do. Ray, I'm so hungry. Why didn't I have breakfast? Ray, I told you had to get a breakfast before you come back to the morning stream. You got to go get something. Zion Luca, what's up? John Stevens, Gabe, Pete, Matt Smoke. No, sell Palantir. Yeah, I sold all my Palantir. That's got to be the title. It's got to be the title. SoFi Weekly today. Yes, SoFi Weekly will be at probably 9:45 p.m. Geis, Paul, Arvin, Ryan, Jason, Smoke Tuna. What's up? Good morning. Vincent, hello. All right. We're back on the market open. Felicia, what's up? Never trust an April 1st video or article. Yep, I agree. Everclear boy, what's up, everyone? Good morning. Happy Friday. Well, we've got a red market this Friday, at least in the pre-market. Let's see, as John Stevens says, is today a day to buy shares? Do we finally have a little bit of an opportunity? I have not bought shares at all this week because the market was mooning, went down a little bit, then went back to mooning again. So I didn't trust anything we're getting. We have full red, at least across my portfolio, this market. Let's share the screen and let's get into what we have. Is Sachin going to be on Palantir Weekly? I can ask him. Again, Sachin is in Malaysia, so it's hard for him to make some of these times. I'll actually ask him, though, today and see if he can get on, and we'll see if we can get him here. So we've got Spotify is down, PayPal is down, Square is down 14% from yesterday, so it's at $60 after the Hindenburg short report. Cathie Wood seemed to not care. She bought 273,000 shares of Square yesterday. So to her, she did not feel like the short report really had any legitimacy at all, and she continued to buy the shares, which I kind of agree with her. The short report is when you really look at it. Now, I don't know if Square is at a bottom, but it's definitely got hit. Coinbase is down 5%, down 14% from yesterday. SoFi down 1.73%. Bitcoin, 27,830. So it's up just a little bit above some of the low 27s that it was at, but it has not gone past 30,000. Remember, there is a public bet for Bitcoin to get to 1 million in the next 90 days. It just looks a little unlikely that that's necessarily going to happen. Palantir down 0.84%. AMC down 1.57%. Enphase trying to get it back under 200 in the 180s would be nice, down 1.3%. Enphase was like 215 yesterday. So definitely big swings. Tesla also 190. I think my Tesla average, if I look at it right now, is 185. Okay, on Tesla. So I'm still a little green on Tesla, but we'll see where it goes from there. Nvidia, I didn't even know it hit 271 yesterday. Now it's at 270 pre-market. That's that, pretty much all of us in this community, in this chat, thought Nvidia was overvalued at 230. And it has just said, screw you guys. We are going to a different level. So, I mean, let's see if Nvidia comes back down to earth, but it is, it's definitely up there. I'm not going to lie. This Hindenburg article was hot air. Yeah, it was. I mean, as I was reading it, I was just like, this doesn't sound like a reasonable thing to expect a company to fall down 70%. Like, people use Cash App, bro. Cash App is not a scam, even if there are scams happening on Cash App. Morning, brother. Hope SMCI hits around 110 to get into it. I would still wait below 110. I wouldn't jump that eagerly yet into 110. Even though I do believe it's undervalued at 110, we'll see if it gets down to like 105-ish, and that's a little bit easier to get there. Just curious, have you listened to Tom's new podcast? Thank you for waiting. Yeah, his podcast with Farzad is awesome. So I definitely recommend you guys go check it out. Him and Farzad, I think they started like 3 weeks ago. It's a great podcast. Fun, talk about Tesla a lot, markets, all that stuff. So you guys can definitely check it out. I think Cathie Wood is hooking up with Elon. Could you imagine that? That'd be crazy. Your Tesla average is 72. Wow. Congrats to you, Ray. Everyone put their Tesla average in the comments if you feel comfortable with sharing that. I know some of you have been in Tesla for a while. I have not been in Tesla as long as, honestly, I bought it in like 2019. So I should still have my 2019 shares, but obviously, people sold here and there because of stupid articles and friends that mentioned you should start selling. Rookie mistake, right? Obviously huge. I didn't even understand Tesla. I just like, oh, it's Tesla, but I didn't really understand Tesla. Not going to make that same mistake again with other companies. But yeah, my Tesla average is at 185. Tesla Meta at 205 right now, up a bit off of that horrible TikTok press conference we had. And we've got Tesla down to about 190. Now, I talked a bit on the morning cowbell. We have Deutsche Bank that's in a little bit of trouble, and their shares are down this morning about 13%. If we go to their shares, we go to DB, that's the ticker symbol. It's down pretty badly, down about 6% now in the pre-market to 8.99. Essentially, the insurance premiums that people pay on credit default swaps, which gets a little bit technical, but those insurance premiums are high. Think of it of like if you buy auto insurance, right? You pay $200 a month to have insurance. This is what people pay for credit default swaps. There's a buyer, there's a seller, someone pays a premium, someone buys it, someone sells it against the premium. And there's a spread that can be made in between that. And those insurance premiums have just gone higher, much higher than normal. And as a result of that, people are selling off the stock because, they don't want to pay massively high premiums, right? Would you pay, 3x the premium you're paying right now at auto insurance? Probably not. And so the stock's suffering a little bit. It is quite ironic that this is happening in the midst of the banking pseudo contagion. Signature Bank of New York, Silicon Valley Bank, FRC, and Credit Suisse and UBS, like FRC down 4% in the pre-market. We're seeing a lot of different things happening in the banking space. Let's go to JPM as well. JPM is down. It's relatively flat, not down too much. And then Bank of America is down 1.49% at 26. So a lot of different things happening in the banking sector. The fact that credit default swaps on Deutsche Bank have higher insurance premiums than what you would imagine, which is causing the stock to fall a little bit. It's just really, it's like you're merging it into the confuffle that is everything that's going on with the banking crisis. And so we're going to see how that ends up turning up when the market opens and see kind of where that goes from there. Samrat, hello, what's up? We got 205 average, 202 average, 162 average, 176 average, 170, 250, 210, 200. So most of you guys are around 170 to 200-ish is your average. Alfred, 144, a little under 200 for me. Be happy to share my 0 Tesla shares. Interesting. Oh, ATVI. Oh, the acquisition happened today. It happened. Hold on. ATVI. Activision Blizzard. 6.64% up at 84. Is there news that the thing is actually happening? Hold on. Activision Blizzard. Let's see the news. Oh, they win the dismissal of Gamersuit over $69 billion Activision deal. So I guess the thing is definitely happening. Congratulations to all ATVI shareholders, because if it's definitely happening, then you guys are going to get a nice little premium for Microsoft. Who chuckled every time someone said Tic Tac? Bro, some of these politicians do not know how the internet works, and it was just hilarious hearing some of them talk about that. I don't think TikTok will ban. Many creators will lose major income stream. I mean, I hope TikTok doesn't get banned either for that reason. I do hope it gets sold off to a U.S. market, but I don't know if that's going to happen. I just don't think it's going to get banned. We're about a minute away from the market open, so let me get my cowbell ready. I don't think it's going to get banned because I think too many politicians see it's doing so much good in terms of economic activity for the United States. But if the Democrats and Republicans really come together and they decide that, look, China is a real threat and this thing has actual, implications, I think the first thing they do is force a sale. I don't think they get rid of it immediately. If ByteDance is not keen on selling off $50 billion of the company to a United States tech platform, then I think they do ban it, but I do think it's a last resort, and I don't think it would happen for like a while. I think they would take some time before they decide officially we want to ban it. But that hearing yesterday was a circus. I mean, some of the questions they were asking were just ridiculous, but some of the questions they were asking, I mean, they brought up a kid who who committed suicide because of the videos on the app. And, the CEO of TikTok really didn't have much to say. It's like, what do you say at that point? Right. So, and their parents were there. So it got really bad. And I listened to most of 5 hours of it, but it was also like, he was also talking to politicians that really had no idea how the internet works. I mean, some people were like, well, how does the Wi-Fi work and all this stuff? So we're going to see what ends up happening. 9:30 a.m., March 24, 2023. The stock market on this Friday is open. Wake your ass up. Here we go. Meta at 205. It's up 0.4% because of this TikTok issue. Meta is going to be the main beneficiary if 150 million people have to go post their short form twerking videos somewhere else. Activision Blizzard up on some good news, up 6%. Bank of America down. JP Morgan down. First Republic is down. Deutsche Bank is down 5% at the market open. We're going to keep a keen eye on Deutsche Bank and see what happens from there. SoFi down 1.56% at 569. Coinbase $65.68. Coinbase is struggling with their Wells notice they just got from the SEC, so that's going to be a big sort of risk in terms of how they are able to execute and work around some of the legal issues. Bitcoin $27,800. GameStop $22. Again, we had a nice little run up because they showed a profit on their quarterly earnings statement, but I don't know if it's enough to maintain all of that momentum. Robinhood $8.47. Again, market cap of Robinhood $7.59 billion. Cash on hand $6 billion. Robinhood is a stock I've always wanted to have because I love the product, but not so sure. And the balance sheet also looks good, but again, not so sure on their growth because their monthly active users just keeps declining so badly because they can't, get people to trade on the product, and they can't keep the people that are on the product trading in an engaged way. Enphase at 203, down 0.61%. S&P at 391, so it's down from it hit 400 as Jerome Powell announced 25 basis points, and now it's down to 391. We haven't seen the S&P decline below that 380 level, so it's been stuck at from 380 to 400, really from 390 to 404, and it just hasn't gone down since then. So we are seeing the S&P kind of play with there. Enovix at $11.38. This is a stock that Vitaly and I talked about on the Daily Cowbell. Spec play, but it's down a little bit today in the morning. NEO down 0.59%. Tesla 191 down 0.41%, relatively flat. Amazon down from 100, 1.38%. Triple QQ down 1%. SOX, which means semis are down. If SOX triple bear leverage inverse ETF to semiconductors is up 3%. You've got Uber at $30, Google at 105. So Google maintaining its leverage above 100. Goldman Sachs at 309, Apple at 158. Nothing too crazy. Some stocks are red, some stocks are green, but not any wild swings in this market open. Buffett sold ATVI too soon. He sold some recently. Yeah, he didn't think that the acquisition was going through, but he definitely has a very big position in it. So if it does go through, he's going to make a big beneficiary of that. TJ, what's up? Going to buy Enphase today. Hopefully we get to 180s. I don't know if we get to 180s on Enphase today. I would hope, but we would have to see a dramatic decline to get down to 180. We'll see. We'll see if it happens. Hey, Mitt, what do you think of CrowdStrike? I like CrowdStrike a lot. I've not initiated a position in it since I haven't been able to do a super big deep dive on it. I know Kathy Wood has been selling a crap ton of it to buy some of her other favorite stocks. Look, their earnings last quarter were actually really good. The market didn't respect it because this macro is not that friendly to some of these SaaS businesses, even though you'd imagine it would be. These are high gross margin SaaS businesses, $31 billion market cap. You could say it's overvalued. You could say it's undervalued. I mean, I would argue it's more undervalued than not. If we look at the max chart, 298 was the top back in October 2021. So it's down significantly. It was at 92 back on February 28th, 2023. So it's rebounded nicely from that. I just don't know enough about them to feel like they're a long-term bet for me, especially when it comes to the opportunity cost of where I would put my capital. But I do like them. I do think they're one of, the few players in cybersecurity that actually are able to execute, and we can just see from the earnings, from the management, from the leadership. Price to sales at 14, a little bit high. PE at 57. I don't know their exact growth rate year over year, but if their PE is at 57, you would be hoping they're growing at least like 35 to 40% year over year. And so if that's the case, then it might be properly valued, but we'll see. Amit, have you ever bought triple leverage ETFs? I have not. I have never bought triple QQQ or an inverse ETF or SQQQ. I wouldn't, it's just nothing I've bought yet, especially because I'm not sure, I think you buy triple leverage ETFs when you know where the market, you have a general understanding of directionally where the market's going. Because again, the downside on them is triple leveraged. And if the market starts swinging the wrong way, you lose a lot of your money. How's Block? Yeah, let's go to Block. Let's go to Square. Take a look at that. Square is at $60, down 2%. So again, if you read the short report, and I went even deeper yesterday, the biggest issue is Cash App, and they think there's fraudulent users. Other than that, I don't see an argument for why they spent 2 years researching Square. I mean, it's not a fraud company. It's a company that they provide services to small businesses through people being able to pay with their credit card or with cash, and they have Cash App, which 51 million people use. And even if it's not 51 million people, it doesn't seem like it's going to decline. Remember, Square lost $10 billion in market cap yesterday. They want them to lose another $20 billion in market cap to the point where this is a $30 stock, $10 billion company. I just don't see that happening. Just doesn't see that happening. Palantir awarded Australian Transaction Revenue and Analysis Center renewal to support financial crimes investigations. Yeah, I saw that yesterday. It's not there was no dollar amount associated with it, but Palantir did get awarded. They were already working with the Austrac organization to be able to do this work, so they just got a renewal on that contract. Look, it makes sense if you're supporting financial criminal investigations. We've already seen the anti-money laundering work that Palantir has been able to do. So, given everything that's going on with the transaction, given everything that's going on with the problems in the banking space, one could imagine that Palantir software is even vital more than ever now with financial institutions as well. You should do DD on Upsellera. Me and Chris will do an entire podcast on Upsellera because Chris says it's a 20x from here. I think it's at $7 right now. And Chris says he's done like 2 years worth of DD on this company. It's actually very similar to Ginkgo Bioworks, but they don't work in synthetic biology. They work in some other stuff. However, he does say it's a stock you want to hold for like 10 years and forget about it. But he likes it a lot. So we'll go deeper on that and we'll keep going from there. Okay. So let's take a look at what of the talking heads have to say on CNBC and keep going from there. Overall, again, on this Friday morning, we have a little bit of a red market, but nothing too crazy. No crazy upside on the downside or upside. We just have Meta that's up primarily because of TikTok. But outside of that, nothing too crazy is going on in the market. Okay, let's take a look at this. Do we potentially get Fed rate cuts by the summer? I think this is a $1 million question, right? Does the Fed said we are not going to cut rates. Most people are calling BS on that because of inflation, which Trueflation.com saying we're under 4%, by the way. If we get under 4%, 3%, the Fed's going to have to cut rates. So let's take a look at if that has any potential.
Is the Fed just a few months away from a rate cut? That's how the markets look to be trading this morning. Steve Leisman joins us now with more. I couldn't help thinking it. And I remember when Lagarde, and we love Christine Lagarde and respect her, but I just remember thinking, I wonder if we're going to look back on some of the comments about how, hey, this is not going to affect what we do in the slightest in terms of fighting inflation. And then you just wonder, really? Okay, you're going to stick with that? We'll see what happens, Steve. But
yeah, a potential candidate for great comments made by central bankers ahead of crises, right?
Yeah.
Remember we had what was it? Greenspan once said that the prices in Portland, Maine, don't arbitrage the price of houses in Portland, Oregon.
Bernanke said something about I don't see big problems in housing or
don't
something.
See big problems. Trichet raising interest rates just at the dawn of the financial crisis. And Joe, this morning, I just want to show you here, we have a really sharp downdraft in yields because of the banking concerns both in the U.S. and in Europe. And they've worked themselves pretty dramatically into the outlook for the Fed in a week, by the way, when the Fed raised interest rates. So let's depend on what source you use. Market's now pricing in a Fed rate cut in either June or July. I'll show you the sources we use here. Take a look at the outlook, and you can see it pretty much goes straight down. 473 by June, 457. There's the current rate. So somewhere in that June-July period, a full rate cut is built in. And then look at the end of the year, 368. So another 120 basis points. I want to show you the Fed market gap here. This is something that we've been tracking. And what this shows is the difference between where the market is priced for the year end and where the Fed is forecast to be at the year end. And I don't think I've ever seen it up this high. So 142 basis points differential. The Fed thinks it's going to be at 413 and the market thinks it's going to be at 360. And last night, the balance sheet we got showing that stress levels remain high in the banking system, but not much worse than they were a week ago. And this is for the week ending on Wednesday. So remember the balance sheet declined 10 straight months. It now rose $300 billion last week and $100 billion in the last report. So not as much. Banks borrowing in response to the recent crisis. Let me just show you how we got there. The discount window lending actually declined.
That balance sheet, again, we're going to go back to that. Look at that right there. So, it's just going down, 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 down. And then there's like 3 months of progress that's just erased as we pull up $400 billion in 2 weeks. And that's, because we have to save a lot of these banks.
Let me just show you how we got there. The discount window lending actually declined to 110 billion, but there was more take up of the Fed's new program, up 41 billion to 53. And there's those loans to the new bridge banks for the banks that were shut down. That was 37 billion more.
Again, it looks bad on the balance sheet, but also that's kind of what you have to do to not have a banking contagion. You had to promise that depositors would be made whole and that regional banks would be fine. But that change led to a $300 billion increase in the balance sheets. And, the ramifications of that, we'll see what happens over the next couple months.
And foreign central banks took down a lot in this new repo program that's really never been used before in numbers. They took 60 billion, and that could be part of the unwind of what's happening with Credit Suisse and UBS. And now we're just going to see, guys, if the latest downdraft in bank stocks is a sign of renewed stress.
Bank stocks haven't been doing well. I mean, the FRC is still stuck in its little window. It had 1 day of momentum, and now it's just getting hit. Meta doing really well, up at 206, up 1.9%. I remember when this bad boy was $88, now all the way at $200. JP Morgan, Bank of America, still all of them down. We still got a sea of red. We got Spotify red, PayPal red, SoFi red. Everything's red. Not red a lot, but it is still red. Palantir down to $8.26. Oh, there we go. We got Enphase under 200. Now let's keep it going. let's keep it going. Keep falling. Let's get you back to 180, and let's have some normal time. We also got Tesla under 190. Look at that. This has just been a crazy week in the markets. I mean, last week we had inflation come in at 6%, or I think the week before that, and then we had Jerome Powell basically say, we're doing 25. We're not going to be super hawkish, even though everyone expected 50 before a banking crisis a month ago. And we had stocks go to the moon, theoretically, right? Enphase was at 215. Tesla was doing well, all this stuff. The day he announced 25, then he started talking and said, actually, we're not cutting rates. And they just fell right back down. And now on a red Friday, which of course we know some stocks are going to be sold off, we're seeing some of these stocks come down. NVIDIA also coming down at 267. It was at about 270 just a couple minutes ago. Ginkgo Bioworks down 1.6% at 121. Uber is down. Wejo is down. Microsoft Wejo back down to 45 cents. I mean, Wejo had a 51% run up 2 days or 4 days ago, and now it's back down. ARK Innovation at $37 as well. Let's take a look at some of the stuff Kathy bought yesterday. Let me just pull that up, and we'll take a look at that as well. Let's go there. She obviously did not care about the short report because she is continuing to buy many stocks when it comes to Block. And I think, the amount of money they spend on research, they probably would have been able to tell if there's a problem. The problem is she was wrong on Berkeley Lights, and that one she ended up buying and going down with the ship. So she has a track record of being wrong on some stocks, but when it comes to Square, I don't know if she'll necessarily be wrong. So she sold Tesla 119,000 shares in ARKK and then 20,000 in ARKW. So she got rid of about 130,000 shares to buy Square, Coinbase, and Teladoc in ARKW and ARKK. She also sold some Atai. Teladoc she hasn't bought in a while, so she's getting a little bit more bullish on the Teladoc valuation. Again, remember, Teladoc was about $300 at one point. Coinbase buying them because of them being down on the Wells notice. It actually makes a lot of sense because if the SEC is not really going to enforce anything meaningful, then you should buy them. But selling Tesla at around probably 200 yesterday. She was buying a lot of Tesla a month ago. Now she's selling it, and she's putting some of that money into Coinbase, Teladoc, and Block. Again, look at that. 230,000 shares in Coinbase, 275,000 in Square, and another 45 and 38,000 in ARKW. So we can see kind of where she's, hedging her bets in terms of some of the stuff she cares about. Rebalancing the ARK fund, probably. I mean, there's a little bit of rebalancing there as well, especially if she's selling off some of the Tesla. 10-year crash. Let's go to the 10-year. Hold on. Let's go to the 10-year. 10-year treasury. It was at 3.68% last time I saw. Wow, 3.3. The 10-year is crashing a little bit. Wow, we've got the 10-year going down. I mean, look, that's not good for the Fed and their whole hawkishness type of approach. Remember, when the treasuries come down, it's because people think, institutions think, investors overall think there's a better return somewhere else. And the reason 10 years and 2 years in treasuries are up is because you don't want to invest in equities. Because if you invest in equities, then you're probably getting a better return than 3.3%. If you're investing in a 10-year, then you're getting a better return than equities, which is why money leaves the market. And that's why we go from there. Let's look at some, can we do all time on the 10-year? Wow, look at this. It was in 1981, you were getting 15% on your money in the 10-year. Obviously, that's when we, had massive levels of inflation and, investing in the market just didn't make sense. And then in 2020, the 10-year was at 0.65. This is the COVID stuff. So when the 10-year and when treasuries dropped to just dramatic lows, it means you put in the market. And then we got to our highest at 4.3 back in 2022. So yeah, 10 years also collapsing as well. Again, Trueflation saying we're at 3% on inflation, which if they're right about that, then the Fed is absolutely down. What website? Just type in 10-year treasury and it'll be a CNBC live chart. And you'll be able to get it from there. This is interesting. This is pretty unique. All right, let's take a look at some of this other stuff we have going on as well. Let's look at durable goods and their orders falling 1% in February as well. This data just came out, I believe, at like 8:10 a.m. All right, let's take a look at this.
Rick Santelli standing by at the CME in Chicago. Rick, what are the numbers today?
Yes, February preliminary. So these will change in a couple weeks. Joe, we all know the durable goods numbers are really volatile, expecting up 2/10, nowhere near it, down 1%. And this follows down 4.5%. That was the lowest since April of 2020. So not a good number on down 1%. And if we strip out transportation, it does improve, but it still doesn't get up to what we expected. It moves up to unchanged. We're expecting up 2/10. In the rearview mirror, there's up 8/10. And if we look at capital good orders, non-defense, ex-aircraft, a proxy for capital spending, of course, it was expected to be down 2/10. That is a bright spot to some degree. Came out better than expected, up 2/10. But in the rearview mirror, it was up 8/10. So up 2/10. Well, we finished up last year at up 2/10. And finally, if we look at shipments versus orders, they were also unchanged, which matches ex-transportation. But in this case, unchanged was 2/10 less than expectations. We're getting some subtle revisions here across the board. Headline durable goods actually moves from -4.5 all the way down to -5. And ex-transportation gets cut in half last month from up 8/10 to up 4/10. Why am I spending so much time on those revisions? Because the numbers weren't good on the surface. And when you take into account that last month was downgraded a bit, it really adds into the notion. I don't follow Fed dot plots, but we all know that this quarter isn't shaping up to be necessarily a good quarter. Many are seeing recession. I don't see a way to avoid it. Just to put a face on this, we all see what's going on with interest rates, 356 in a 2-year. Just think about this. On March 8th, it closed at 507. The high yield closed. That was the highest since 2007. Now we're at the lowest yields since September. 10-year. And we did the charts, a month ago? And about 5 months ago, I staked my claim here. 4.25 is the high. It was the high back in October. We never came back and challenged those fall levels. You remember, Joe, we did the Elliott wave.
This is why Rick Santori has been saying we need to stop these interest rate hikes. Again, 507 was the high, and now it's coming down to the 307. I like him. I like him too. This guy's he actually has a lot of analysis when it comes to this stuff, and he dives deep into the numbers. But as we see, durable goods falling just 0.1%. This is also, it's a little bit of conflicting data with some of the job reports we got. It's not enough to necessarily make a broad-based conclusion. We were expecting 198,000 jobless claims, and we got 191,000. So it's just not enough for the Fed to really be able to make a substantive decision on something that's being tight, a labor market that's necessarily tight or not tight. Now, on the call with Jerome Powell, he did say that the labor market is still way too hot. And because it's way too hot, it's not necessarily leading them to feel that they should be more dovish because there's just too many jobs that are open. And that is the age-old problem that the Fed has had over the past really couple months, that there's just been way too many jobs in place. And because of those jobs, they're not going to be able to do much when it comes to decreasing inflation. But again, they might just not be looking at the right data, because if you look at the right data, which may be the right data, maybe not be the right data, we see that inflation is down to 3.97%. And that's, it's again, the U.S. government reported 6%. So I would be really interested to see where the CPI comes in next quarter or next month, because if we get it down to about 5% or 5.6, I mean, most consensus estimates are probably like 5.4, 5.5. It probably wouldn't come down as dramatically from that. But if it does, this market's going to be in a different world because, the Fed has a 2% mandate. And if that 2% mandate happens earlier than not, they're going to have to cut, because that's the only thing they really are going to be able to do. Okay. I think that's it for me, everybody. Got to get out of here. I actually have to go to the chiropractor because, they got to work on my neck and my back. I'm carrying the world on my shoulders. No, I'm just kidding. I go there every Friday, get a little bit of adjustment. That's it for me. We will have SoFi Weekly and Palantir Weekly tonight. So I hope you guys tune in for those and enjoy SoFi Weekly. We have some big news in terms of FDIC requirements on SoFi being increased to 2 million, which is awesome for SoFi shareholders and for SoFi shareholders that feel more safe. We had Anthony Noto have a fireside chat with Bank of America's VP head of global research, and he said some really interesting things about deposit growth. So it's going to be interesting to talk about that. And we're going to have Palantir Weekly, where we discuss all the good stuff in the world of Palantir, some new deals they got, a new interview that Carp put out, just a bunch of different things going on in the world of Palantir. Crack your bones. Always got to crack it. Got to stand up and walk more around. I agree. Aren't chiropractors fake? People say chiropractors are fake, but they are not fake. They work magic, even if they do it in a different way. They're as fake as the bricks, and the bricks are real. So we know that chiropractors are real. All right, everybody. Thank you so much. I will see you guys later today. Have a great day. Bye-bye. Enjoy your Friday.